We're back with another monthly X Dividend video. Now, if this is your first time checking this out, then every month I cover a collection of stocks that are going X Dividend very soon. And this time we're looking at the month of August. Now, if you want to know more about dividends, you can check out my video on what are dividends. I'll leave that in the link in the description below. Now, the ex-dividend, what that is basically if you own shares in a company and you want to receive the next dividend payment, then you have to own shares in that company before the ex-dividend date. If you buy after the ex-dividend date, you will not be eligible for the next dividend payment. You'll have to wait until the following ex-dividend date. And every company is different, but that could be anywhere between 3, 6 months, etc. So if you want to get that next dividend payment, you need to get the shares before the ex-dividend date. Now, I appreciate if you can hit the like and subscribe to my channel. Thank you for the support, guys. I really do appreciate it. So let's get into it. Without further ado, I've got 8 companies for you today, and that's a mixture between the Ftse100 and the S&P500.
So the first company up here is ticker symbol SBUX, Starbucks. Starbucks, I think we all know them. It's a huge coffee chain. They are going ex-dividend on the 6th of August, and they'll be paying out just a couple weeks later on the 21st of August. So it's paying out in the same month. It has quite a okay dividend yield actually of 2.12%, which is quite good for such a well-established company, which is going to work out around about 41 cents per share. Now, Starbucks, if we look at the 1-year graph here, it has obviously dropped off because of the crash in March, and it did recover, and now it's kind of flattening out, currently trading at $76 per share. So Starbucks has a market cap of around 90 billion and is currently on a PE ratio of 28.92. That PE ratio looks quite high, but it is pretty much in line with the industry. It has a predicted future growth of 36% in the next 1 to 3 years, which is amazing. If we look at some of its profit margin here, it's making a profit of 13.58%. That's obviously less than what it was last year, but I have no doubt they'll bring that back. And debt to assets, it's got 132% debt. So the debt is quite high, and the debt to equity ratio is actually 186%. But as we know, not all debt is bad. What I like about this company, it is a growing company. As I say, look at the maximum graph here over the years. If we go back to 2013, it was only around $38 per share. Now it's just shot up, and obviously has dipped again, but I'm pretty sure that will kind of recover. It's quite a solid company. It has a nice dividend of 2.12%, and the payout ratio for that as well is 56%. So it's quite a good payout ratio, and it has been increasing its dividend over the past 10 years. So the second company up on my list is ticker symbol INTC, and that is Intel. So Intel is a huge tech company. It is basically involved in computing, networking, data, etc. It's massive, and it's going ex-dividend on the 6th of August, and it will be paying out on the 1st of September. It's got a dividend yield of 2.68%, which is going to work out around about 33 cents per share. Now, Intel, as we see the 1-year graph here, this is quite an impressive graph. Huge growth up until before the crash. The crash happened, a big drop off, and then only just a few days ago, if we go to about last month, just here another huge drop off. So we're pretty much at those lows again from the crash. If we go on the maximum graph here, we can see it's been growing and growing over the years. We like growth companies like this, and you can see that back away in 2013, it was only $24 per share. Now, this company, according to analysts, is undervalued by 35%, and the PE ratio at 10.30 is very low, with the industry being around about 38.5. So this PE ratio is amazing compared to the industry. Its future earnings growth is predicted to be 2.2%, so nothing really spectacular in the next 1 to 3 years. However, the return on equity is predicted to be 22.4%, which is great. If we look at this profit margin, it's making a very nice profit, 29.25%. And it also has quite a low debt as well of 43.12%, with debt to equity of 46%. So those balance sheet, the figures right there are very good. The dividend yield, as we say, is 2.68%, and it has a very low payout ratio of just 23%. It's been increasing that dividend as well over the past 10 years. Now, the third company on this list is in the Ftse100, and that is EPIC code AHT Ashtead Group. So Ashtead Group is in the Ftse100, and it's basically a huge construction and industrial rental company, and it's going ex-dividend on the 13th of August, which will be paying out on the 11th of September. It's going to be paying out around about 33 pence per share. It's got a dividend yield of 1.54. So this company is currently trading at about £24.50 per share. We can see the 1 year graph here. It's pretty much almost recovered to where it was. It's a little bit off the big crash again, but like I say, it's gone right up again, and the recovery in this has been amazing. If we look at its maximum graph, this is another amazing graph here. Growth and growth over the years. This is a huge growth company. It is actually at its current share price overvalued by 38.8% according to analysts. The PE ratio is 12.07, so quite a low PE. It's kind of in line with the market and the industry at the moment as well. It's predicted to have a future return on equity to be 21%, which is quite nice. If we look at the profit margin for this company, it's making a profit. It's 14.64% profit, which is quite nice as well, sort of in line where it was last year. And then we look at its debt as well. It has quite a high debt, to be fair, 71.78%. And the debt to equity is 151%. So debt is kind of high, but they're probably taken quite a lot on due to what's gone on in the world. They've been increasing their dividend over the past 10 years as well. And once again, it has a very low payout ratio of 25%. So lots of maneuver on that dividend as well. So that's Ashtead Group. Now, the fourth company on this list is ticker symbol DUKE, and that is Duke Energy. So Duke Energy is in the S&P500, and the clues in the name, it is a energy company, so big energy company as well. It's going ex-dividend on the 13th of August, and it will be paying out on the 16th of September. It's going to be paying out quite a nice dividend yield actually of 4.54%, which is going to get you about 96 cents per share. A share in this company at the moment is $84. And like most energy companies, it's not an easy ride. There's a lot of ups and downs. However, over the years, it has been growing. We can see the 1 year graph here. You know, it dropped off, and it's currently 3.6% down from 52 weeks ago. So Duke Energy's valuation is kind of in line. It's a tiny bit undervalued according to analysts, but nothing much to worry about there. Its PE ratio is 16.74, which is kind of high because the industry is about 11.6 at the moment. So this energy company it's definitely got a higher trading price at the moment than a lot of others out there. It's predicted to have a massive future return on equity to be 83%, which is just huge. If we look at some of its financials, it's making a profit. It's 14.94%, which is quite nice to see. The debt as well is 70.52. Once again, slightly higher debt. I wouldn't say there's a massive room for concern there, but the debt to equity is 134%. Now, in terms of its dividend, it's been growing its dividend for 10 years. The payout ratio is slightly higher though, 74% payout ratio, but it's going to give you a 4.54% dividend yield of 96 cents per share. So the fifth company on this list is ticker symbol TGT, and that is Target. So Target is another huge retailer in the US. I don't think we need to go into detail on this one. It's currently trading at $124 per share, and it's got absolutely huge growth, and it's done phenomenal over the past few months. Target's ex-dividend date is the 18th of August, and it will be paying out on the 10th of September. It's a very popular stock. It'll be paying out 68 cents per share with dividend yield of 2.22%. Now we can see obviously the screen here, it's shot up ridiculously last year. The crash happened, and it's pretty much almost recovered to where it was. We can see here the little spike there. It's pretty much almost recovered. It's a very expensive stock with a huge market cap of 61 billion, and we look at its PE ratio 19.25. That's pretty much in line with the industry and the market as well. It's between the market and industry, I should say. It's pretty much at its fair value as well in terms of its share price according to analysts. The future return on equity is predicted to be 25.1%. If we look at its profit, it's making a small profit at the moment, 4.2%, and a debt to assets of 72%. It's been increasing its dividend over the past 10 years, and the payout ratio is 48%. So it's quite a nice payout ratio there. One thing that does concern me about this company is insiders have been selling shares over the past year and 6 months, 3 months, etc. Over 9 million has been sold. So that's quite a lot. But this is a very popular company and I think they'll be around for quite a while. So the sixth stock on my list is another hugely popular company. And I think we all know this one. That's ticker symbol MSFT, Microsoft. So Microsoft, as we know, is a huge technology company. I'm going to go straight into their graph here. Look at that graph. It's one of the best graphs you've seen, consistently growing and growing and growing over its years, and it's pretty much at its highs at the moment, or not far off. It's going ex-dividend on the 19th of August, paying out on the 10th of September. The dividend yield is 1%, just over 1%. So it's not the highest dividend yields, but I wanted to include it because it is a very, very popular company that I know a lot of people hold. It's going to pay you around about 51 cents per share. Share price in this at the moment is $203. We can see the 1 year graph is still phenomenal. This is a growing and growing company. And according to analysts, at its current price, it's still not far off. It's overvalued by 8%, which I think is amazing, to be honest. It's only 8% overvalued, and it's almost at its highs. It has a PE of 34, which compared to the industry, which is about on average 57, it's quite a low PE. Overall, it's very high, but for the industry, it's quite low. It has a future predicted growth of earnings of 10.8% and a future return on equity of 37.2%. Those figures are amazing. If we look at its profit margin here, it's making a very nice profit, 30.96%. And debt to assets is also, it's not really, it's kind of in line with where it has been for the previous years, 60.74%. So it's a very good debt to assets in my opinion, and a very healthy profit margin. The dividend has been increasing over the past 10 years, and it has quite a low payout ratio of 35% as well. This company on average has returned 27.5%. It's a big company. I know a lot of people hold it, so I wanted to include it in this list. Moving on to our seventh company, and it's another one in the Ftse100 here. I only got 2 Ftse100 stocks for you, and this one is Epic code IMB, Imperial Brands. Now, Imperial Brands is in the Ftse100 and it's a big tobacco company. Epic code IMB is going ex-dividend on the 20th of August and it's paying out on the 30th of September. It has a very high dividend yield of 13.37% and it'll be paying out around about 20.85 pence per share. That dividend yield has a very high payout ratio, 206%, so that is probably not sustainable. And when we look at the share price, you could probably see why. It has dropped dramatically over the course of the year and it's pretty much again at crash level. If we go at the maximum graph here, this is not something I like to see. It has been decreasing year after year and it's down around about 62% from 2016. So it has been decreasing, but I wanted to include this one because I know a lot of people that hold it and it does have a very high dividend yield, albeit probably not sustainable. Now, according to analysts, this company is undervalued by 81% and it has a huge future return on equity of 39% in the next 1 to 3 years, which is very high. If we look at its profit margin here, it has a 3% profit margin, so it is making a profit just about. But the debt is very high on this again, 85% debt with a 289% debt to equity. So by all means, this share price isn't the best company one we've seen. It's not got the best growth. However, it does pay very high dividend and it is confirmed and it's paying out on the 20th of August. So on to my last company on the list, and this is going to be another big company, ticker symbol GS, and that is Goldman Sachs. So Goldman Sachs, ticker symbol GS, is going ex-dividend on the 31st of August and it'll be paying out on the 29th of September. Goldman Sachs is basically a big investment banking company and it's a very popular company. It's got quite a high share price of $199. The dividend yield in this company is 2.43%, which is going to get you a nice dividend yield of $1.25 per share. This company, as we can see here, it's dropped off like most banking companies from the crash and it has recovered quite nicely actually. If we look at its maximum graph, It's a bit up and down, but overall it has been kind of growing. Now, according to analysts, this is overvalued by 41.8%. However, if we look at the PE, is quite a low PE actually, 8.7. Compared to the market and the industry, that's a fairly low PE. Now, it's predicted to have a return on earnings of 19.4% future growth and a future return on equity of 9.8%. So it's got a nice steady return on equity there in the next 1 to 3 years. So going to some of its financials here, 15% profit margin, that's okay. And then debt to assets quite high again, 90.91%, with a debt to equity of 251. This company has been paying this dividend yield over the years, and it has been increasing for the past 10 years. It has quite a nice payout ratio as well of just 26%. So that's nice to see. It's a pretty solid company. A lot of people hold this one, and it's $1.25 per share.
So there we are. That's my 8 companies going ex-dividend in the month of August. Now, as you know, there are a lot more companies going ex-dividend. That is just my selected few. And if you are planning on investing into the stock market, you should always do your own research first. I'm not a financial advisor. So thanks for watching, guys. And if you can hit the like and subscribe to my channel, that is greatly appreciated. Let me know down in the comments below. Do you hold any of these stocks? Maybe you're considering adding some to your portfolios. Let me know. Thanks for watching, and until next time,